Hi, this is Tony Torres with Edina Realty Insurance, and today's topic is loss assessment. And we're going to focus specifically on this coverage because it affects townhouses and condos, and compare that to other losses in terms of timing. So let's go ahead and get started. On a typical loss or claim for homeowners or for auto, they're going to look at the actual date of the loss to decide who's responsible for helping you cover that loss. So if you have coverage on the date of the loss for a storm or an actual collision or a windshield chip where a stone hits your windshield, that particular date is going to trigger what company is going to help you pay for that coverage, and whether you have coverage or not. So some folks that have liability coverage only on their auto, if they don't have full coverage on the date that collision occurs, you're not going to have coverage to help you repair that damage to your vehicle. So again, the date of the loss is when the actual loss occurred. This is very different from loss assessment coverage on townhouses and condos, and that's why I bring it up, because it does come up frequently. And so the date of the actual storm could have been 2 years ago. Now the HOA or homeowners association is negotiating and working with their insurance company to get that claim process. Once the claim is accepted by the insurance company and they assess their deductible, or the homeowners association has to pay their deductible, they will take that deductible and divide it amongst the homeowners of a particular building, because typically deductibles are per building. So let's say they have 15 buildings in a large complex, and all those buildings have to get new roofs. Again, each building is going to have a deductible assigned, and they're going to divide that deductible amongst the homeowners. Now, in the case of loss assessment, it could be 2 years before they actually send out the letter saying you've been assessed $10,000 for this hail damage. We're going to get new roofs. And in that case, that's going to be the date that triggers what company is going to be helping you pay for that loss, or what homeowner is going to be assessed. And this happens quite a bit because that townhouse could have changed hands once, maybe even twice, between the time that the actual storm occurred and the time that the loss assessment letter goes out. And it's the homeowner, at the time the loss assessment letter goes out, that's going to have to pay for that loss assessment. So make sure that you have plenty of loss assessment coverage on your policy. And I've seen these loss assessment costs going up steadily. The most common one I'm seeing now is $25,000, but I've seen them at $50,000 as well. Whereas a few years ago, it was common that these would be $5,000 and $10,000 in potential loss assessments. So talk to your insurance agent. Again, my name is Anthony Torres with Edina Realty Insurance, or Tony Torres. Feel free to give me a call at 612-275-1371, and have a great day. Thank you.